Hello, everybody. Hello, everybody. All the people and the attendees, please mute yourself and turn off your video. Okay. All right. Daniel Grant. Yeah. All right. Hello, everyone. I'm going to repeat this a few times. All attendees, please mute yourself and turn off your video. All right. Bob, are we recording yet?
Yes.
We are recording. All right. Well, let's start this up. Hello, everybody. My name is L.Sashin. I am the president and founder of L.Sashin and Associates. L.Sashin and Associates and Total Food Service welcome you to our virtual breakfast session. Fred, you want to say hello to people?
Good morning, everybody. I'm Fred Clashman. I'm the publisher of Total Food Service. So glad you could join us. Very exciting day here in New York with the ribbon cutting at the Javits Center, which means that trade shows will be back soon. And with that, hopefully a flow of tourists and travelers once again.
Okay. Bob, you want to say hello?
Hey, good morning, everybody. Happy to be here. I'm not a restaurant or food industry veteran, but I'm really excited about the Restaurant Restoration Act and hopefully waiting to see what that can do for an industry that needs help. So glad to be here.
All right. Now, one note to everyone. Bob is going to be in direct contact with you through chat. If you have any questions on what anyone is saying, chat with Bob. And Bob, can't ask every question because nobody else will speak, but Bob will ask the question to the panel. Okay, Diane.
Good morning. How are you? My name is Diane Giordano. I'm a tax partner at Marcum, LLP, which is a major accounting firm. My office is in Melville, New York, and we have 25, 30 offices throughout the country, China, and some other countries as well. I specialize in primarily corporate taxation and consulting. I'm also a member of the firm's food and beverage group. And I'm very happy to be here today to speak about this program.
Thank you, Diane. Lou.
I want to thank Larry and Fred for having us today. So thank you so much. I head up our food and beverage team at Marcum nationally. And our 100 members, we're representing them today, Diane and myself. So thank you for having us. And Diane is one of our resident experts on all of these issues with RRF and any tax topics. So thanks so much for having us.
Very welcome. Jackie.
Yeah, good morning, everybody. I am Jackie Kopcho. I am the managing partner at Big Branch Capital. I come from both sides of the industry. I worked my entire life in food and beverage, and now I'm actually looking to acquire a privately held company. So here, if you guys have any questions on how to prepare for a sale, what to do, who to talk to, or if you're looking to sell, more than happy to help everybody out on that front.
Thank you, Jackie. Zach.
Yeah, hi everyone, good morning. Happy to be here, Zach Chubb. I'm a managing director with City National Bank. I head up the East Coast coverage for the food and beverage sector. At City National Bank, we are one of the largest providers of PPP loans. And so I've been very active and work with a lot of restaurant companies, food manufacturers, food wholesalers, and distributors. So happy to join the panel. Appreciate the opportunity and look forward to a good discussion this morning.
Thank you, Zach. Peter.
Good morning, everyone. Peter Herraro, New York Hospitality Group. We are barbecue to black tie events. We run 4 organic cafes from Montefiore, have a 90-year-old restaurant in White Plains, New York, called Sam's of Kidney Way. Great American Barbecue Company, our off-premise catering division, and we have a partnership with a non-for-profit on a 110-year-old, 13,000 square foot mansion that right now is pretty empty, or it's been empty for a while. So we're the operator out of the group, a little catering, a little restaurant, and a little cafe.
Thank you, Peter. Dale.
Morning, everyone.
Good morning, Dale Willerton at the Lease Coach. Great to be with you today. I'm a professional lease consultant and negotiator. I exclusively work with restaurant tenants and a few other industries. I'm looking forward to speaking at the next New York restaurant show. We've got California and Florida coming up, doing lots of lease renewal deals and still some pandemic or rent reduction deals across the country for restaurant tenants. So anything leasing, the Lease Coach is who we are.
Thank you, Dale. Well, let's move right along. The Restaurant Rescue Fund. This is the 6th name change that we've had in the last 2 months. And this is, I think, the 3rd program coming from the federal government that is geared towards the helping restaurateurs and small businesses with their businesses. Lou, I'm going to start with you. Like I said, this is the 3rd of a series. Besides the fact that it might be the last, what is different about this one than all the ones that preceded it?
Well, thank you. You know, I really feel for all the restaurateurs out there. This has been a very, very rough period. And, you know, there's still some things going on right now that some challenges with labor. You know, there's a lot of people that don't want to come back to work. The turnover has always been high, millions of jobs lost, and over 100,000 restaurants permanently closed. You know, add to that the attack on margins because of delivery and booking scenarios, and now rising food costs and rising technology costs. So a lot of things going on, permanent shifts in the consumer behaviors as well. But there's light at the end of the tunnel. There was PPP1, PPP2, EIDL, which Larry, I don't know if you said 3. We have RRF. We have some other very wonderful tax credits. Maybe Diane can hit some of those. We have outdoor dining, ghost kitchens, and a lot of technology acceleration right now. So the restaurants I visited recently are very, very booked. So I think, you know, the rush to come back to normal is there. What makes this program a little different is minority disadvantaged groups got priority. It's geared towards smaller businesses, smaller operators. And I think it's a wonderful, wonderful program. So I'll stop at that point.
All right. Thank you. Thank you. Zach, what are you seeing with the people that you're working with? What kind of interest is there? And what are the stumbling blocks that they're coming to you for help with?
Yeah, you know, this program, as you mentioned, Larry, is the 3rd or 4th or so of the programs. You know, as it's announced, they continue to change. As I mentioned at my preview, you know, at City National, we were one of the largest providers of PPP. I think we put out close to $4.5 billion of funding there. The vast majority of those for us were under 150,000. So we worked with a lot of local, regional folks, and there was a mad scramble, not surprisingly, at the beginning to get funds lined up under those programs, and get aligned with a bank or a provider to do that. You know, with this program, you can go direct to the SBA, or you can do through some of your POS providers. So the access is a little bit different. It seems that now from the outset, there's a little more clarity on the program, the guide rails in place than PPP. It's clearly more targeted than, the broader, the broader programs previously. So I think this one's a little bit more, well-directed. I think it's going to hopefully shore up, a lot of the restaurants, a lot of the operators that had struggled and continued to have a gap in a funding need. And so, some of the questions we've gotten early on is who can qualify and how can we use the money. But it seems like the guidelines have been a little bit more clear, at least coming from the SBA this go around.
Okay, thank you. I've been speaking to some restaurateurs. I eat out a lot, and I always talk about this when I get a chance to speak to them. And I was at a restaurant in Bronxville, which will stay unnamed right now, and I said, what do you think about this new the Restaurant Rescue Fund? And the owner of the restaurant said, it's funny. We have the tent outside and we have the restaurant inside, and we did not close it all. And if you add together what we brought in and what we were given in past programs, it doesn't look like we'll be able to qualify for this program. Diane, can you talk to somebody that stayed open? I know a lot of places closed for the winter. This guy stayed open, slogged through, and now it looks like he's not going to get anything. What can happen with somebody like that?
That may likely be the case. In its simplest definition, the grant, which is totally non-taxable, is basically to make up for businesses that closed or slowed down during the pandemic in 2020. So in its simplest calculation, a company would look at their 2019 gross receipts, subtract out the 2020 gross receipts, and many businesses were closed. And also from that, they subtract out the PPP funds. So if 19 was a good year and 20 was a not so good year, there's clearly a difference, a drop in receipts. And if there was a PPP loan, that further reduces the drop in receipts. So in the case of your example with this particular entity, it very well may be that they were not considered to have a drop in receipts. But we were very busy the first week in May, which is when the SBA portal opened, helping clients do this calculation. And most food service industry businesses were closed, or they really slowed down, especially here in the New York area, and they would have eligibility. I think that in your particular example, it may be unusual. I would think that your restaurants or servers did have some sort of a drop, even with the PPP funds.
Mm-hmm. 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 Jackie, you analyze companies all the time. In this situation, this climate, what do you look for in restaurants and how do you help them prepare for either a sale or taking on a partner or such in this climate?
Yeah, and it's very tough. I mean, we are in times that we have never seen before, and I'm not going to call them unprecedented, but it's somewhat close to that, right? So how I like to look at it and speak with business owners, I mean, there are going to be tough decisions that need to be made on every day, right? I like to speak with owners and say, let's look at the structure from a whole. Like, take a step back from the day to day. I mean, I remember working in restaurants in any business, right? It's you try to get through, that morning, that afternoon, that night, usually that nightcap drink, and then you do it again at the end of the day, right? The next day. Try to take a look from the 30,000 view perspective and say, okay, at this time where things are a little different, going forward, how can we create a little bit more efficiency? How do we put processes in place? I know that there's, a lot of issues going on with labor and turnaround and people not coming back, but can you create an SOP where, you can just slot people in, where training is easy? So it's taking time off your back, taking time off your staff back. Are there efficiencies, right? I was speaking with a restaurant a few weeks ago where they implemented a system that helped with delivery efficiency, and they were able to reduce. I mean, it's a pizza delivery location, but they were able to reduce their staff by a few $1,000s, right? So I know it was high volume, but if you could take a step back and say, what have we been doing and how can we potentially do it a little better or more efficient? You can, create processes where buyers always, buyers or partners always like to look and say, what kind of program, what kind of business have you created that's easy to replicate, that is self-sustaining, that it's not, the owner in there training everybody, telling people how to do things. It's documents, it's scheduling systems. I'm not always saying spend the money, but sometimes there is a good trade-off there. So, that's my recommendation. It's always, how to create some efficiencies at a time where it might be a little slower than usual.
Okay, so let's move from 30,000 feet up down to ground zero. Peter, you've been listening. You live this every day of your life, sometimes a day and a half and 24 hours. What's going on with you? I know you're doing a tremendous reorganization of your company right now. Can you share some of that with us?
I can, and I just want to say to the panelists and to the viewers, listen to your experts. They're on the screen right now. I couldn't imagine not having a great relationship. They always talk having a great relationship with your banker, with your CFO, your accountant, your controller, your marketing people. This is the time that all those relationships are coming to fruit. This is my 36th year in business, and I can tell you this is our fourth recession. Only because I've been through 3 before do I find this exhausting. Yes. I agree with everybody. We're exhausted. Look at the bags underneath my eyes. I get it. Haven't had a day off in 7 months. But it is the most exciting time in my career, and I guarantee in most people's careers. Every recession in the past, we launched another company. I started 35 years ago I bought a bar, turned it into a bistro. Every recession, we looked at our clientele. To Jackie's point, we looked at our clientele. What wallet share could we add to? What else could we sell to our core clients? So if I may, think of the second kiss. How hard is it when we were all dating a couple of years ago, for that first kiss? You were nervous, but once you got the first kiss, the second kiss is easy. It is so exciting right now with, as Louis, as you were saying, the technology out there. We're spending, what I'm excited about, the difference between this plan and the others is the percentages are different. We had to spend 60% of the PPP money towards just payroll and towards certain categories. Certain categories were off limits. The categories, if I remember correctly, are 3 times the amount. There are no percentages. This is exciting. You can actually make investments in your company. And if I may, it'll take me just a second. I have a list of 12 different strategic investments that you can make that will literally give you the money back within 6 to 18 months. I've never had this kind of money ever and resources, and everybody's out there to help us. We're not victims. This is, as you've all said, we were for a short period enemy number one, public enemy number one, because everybody thought at the restaurant, at the bar, is where the virus is being spread. And we've learned since then that that's just not true. Bob, you had a comment?
Okay, keep going, finish first.
Oh, okay, sorry. So the boots on the ground, if I may, this is exciting. We're opening up a 4th cafe, and there was an opportunity to look at my partner and say, I apologize. I'm in the game. We developed the concept, but because we stayed open and lost money, we're not going to be able to fund this project that much. The partner was so happy, they turned around and said, not a problem. What do you need? I gave them a number. They said, okay, no problem. We worked on the number, showed them how efficient and effective we lowered, it was $100,000. We lowered it to $67,000. They were so impressed because you're the first vendor. We're restaurateur caterers. We're hospitality. We know how to squeeze a penny out of a penny. And it showed our ability to come back. So I agree with everybody. They're tough times, but they're exciting times. We're looking at redoing our restaurant because we're going to a 90-year anniversary. And we're actually, Larry, putting in with the hostess stand, which is counterintuitive. We're quadrupling the hostess stand because it's going to be a pickup area for the Great American Barbecue Company, for Cape and Berry events, for Sam's of Gidney, and that hostess is now going to be an ambassador. And we're going with if I may, we've gone through a bunch of POS systems. Great opportunities to make investments, people. Great. And I apologize, I don't remember who said it. A local restaurateur caterer getting into e-commerce. It's going to be fantastic. We're looking at $150,000 to $200,000 for 3 companies, each of them, over $500,000 in pickup. I'm sorry, the pickup as a restaurateur, I don't really know what real pickup is. It was less than 3% of our volume before. These are exciting times. There are so many ways. Con Ed will help you with rebates, with your lighting, with programmable HVAC, your controls, variable speed motors. We happened to do it 3 years ago. We went from $165,000 in utilities down to $85,000. So I apologize. I don't mean to monopolize the time, but these are really exciting times. I suggest lean on your consultants and experts. They have been telling you how smart and how great they can help you. By the way, it's time. Let's go. And they're dying to tell your success stories to all their clients, because this is what, honestly, the bankers, the accountants, the marketing people, they're dying for this. They can show off right now.
Okay, thank you, Peter. You know, you'd be so much more successful if you only picked up on the enthusiasm. I just love it, Peter. Bob, you had your hand raised.
I do. I have a question from the audience, and it's not quite as optimistic as Peter is. But so the question is that a lot of restaurants and people in the food business have been concerned that with staffing, they're finding it hard to staff, hard to find people to come back to work, and for a number of reasons. And they would like some comments on that. I guess without being, from my perspective, without being political on this, can anybody comment on the staffing problems?
Yeah, I want to go to Fred on that.
Some kind of solution, yeah, some kind of solutions, and also is the Restoration Act money able to go towards raising salaries and so forth?
Fred?
Short-term answer is that you are finding a lot of restaurateurs incentivizing existing help with either bonuses to stay or bonuses to bring additional friends to staff, etc. So I think that that's the most simplistic answer right now. I think I'm seeing a lot of use of this potential grant money to recruit and pay onboarding bonuses, etc. And then I think, long term, I think that immigration needs to be revisited with whoever your representation is. It's not a political issue. It's a restaurant industry issue, et cetera. Where is this next generation of bus people and wait staff going to come from?
All right. Thank you. Jackie, I know you have your hand up, and Bob, you have your hand up, but we have not yet heard from Dale. Dale, we spoke about some people a lot of people are going to be getting money from the government, but there are some people that just worked out too well for them during this time, but they're still in a bind because they're spending and they're really struggling to get this. You've been in some of our virtual breakfast sessions before. How have you been helping people get through these times? Because a big portion of everybody, and I know Peter's head is going to go up and down with this, a big portion of what he spends every month is rent.
Larry,
where
the lease coach specializes in negotiating lease renewals. And as we negotiate lease renewals for restaurant tenants across the country, it's more than surprising. It's almost shocking that 85% of landlords are looking for a rent increase during the pandemic. We can see the light at the end of this tunnel, but even 6 or 7 months ago, before we had any vaccines going into any arms, landlords were still trying to get rent increases from their tenants who were maybe completely closed. I had a situation like that in Texas where, the lease was coming up for renewal and the tenant said, what do you think I should do? The landlord's trying to raise my rent. I'm only at 25% capacity. I said, I would not renew. I would not renew my lease. This is not going to end well for you. And he was very happy with that decision. He got out because most leases are a 5-year commitment. You've got to have a bit of an eye on the time horizon that's coming up. And something that Peter said really resonated with me, of course, about creating relationships with the people in your vendor world. And that's really important with landlords. A lot of these tenants don't know their landlords very well. And when I'm negotiating a lease renewal for a tenant, 95% of landlords ask if the tenant got PPP. And they're going to ask if they got this new funding as well. They want to know that. And so when I call up a landlord and I'm about to negotiate a lease, the first thing I do is I don't cry about the problems the tenant is having. I say, Mr. Landlord, this must have been a hellish 18 or 16 months for you. This must have been a really tough time for you as a landlord because so many tenants are not able to pay their full rent. And the landlords, nobody gives the landlord any sympathy. The landlord goes, well, that's right. I mean, it's been horrible for us. We're having all kinds of rent collection issues. Tenants are defaulting and moving out at, at midnight. And then the landlord says, what are you calling me about? Well, I'm calling you about your restaurant tenant. They're having similar problems. And now we're on the same page. So you can't pitch, if you're negotiating on a lease, you can't pitch yourself against the landlord. You got to get on the same side of the table as the landlord. They're hurting too.
Okay. Jackie,
Well
you
said,
had your
Dave.
hand raised.
Yeah, it's kind of switching topics a little bit, but I've been having a lot of conversations with business owners about the delivery landscape. And I know, Peter, you touched on it a little bit. And going from having your own fleet or your own people to deliver who can, create more opportunities for income via tips, et cetera, versus going with some of these aggregators like Uber Eats and Grubhub, et cetera, who are taking, not only a pretty percentage of a fee, but potentially taking away some short, sweet, high tip options from if you have your own delivery fleet. So if anybody, if Peter, I guess you might be kind of the best one for this, is to touch on, how do you look at delivery now? And is it your own fleet or do you look at working with the aggregators?
I would say it really depends on the outlet. We have chosen not to do delivery because depending on the outlet. We've chosen to do family meals. We've chosen to do holiday meals, different things. We've chosen to do, for a while, we were doing complimentary cocktails if you came in and did a pickup. We've done the curbside. Our clientele is a little different at the restaurant. We've looked into it and the numbers just didn't jive, Jackie, because of the profit sharing. We actually used to give a 10% courtesy to all to go. And we since rescind that. And we explained to it very politely that we just can't afford to do it anymore. But did you want a cappuccino or coffee while you're waiting for your order or to go? Jackie, I know your husband's working really hard lately. Could I send you a cappuccino with it for him to go? It goes a long, long way to have those relationships with your client. But delivery, pickup, curbside, we have so many options today. And I know the POS systems now, it's funny you say we're going, and I'm being careful, we're going with the new POS system that has a national contract with the delivery service. So for the first time in 35 years, we're looking at delivery now. So I agree with you, Jackie.
Yeah, this is going to be touched on one of the other virtual breakfast sessions. We're doing a whole session on refocusing, and hopefully those out there, some of you will come back and see it. I have one question, and it's to two people at the same time, actually. Dale, in a previous session, you spoke about your renegotiation of leases of people whose restaurants are failing, and they're hanging on by the skin of their teeth. The question is, and if you can just touch on that briefly, and then I'm going to shoot it over to Diane about a tax question after that. So can you talk about the renegotiation? Do I shut the door, or do we approach the landlord?
Well, the first thing we're doing for most tenants is we're immediately negotiating a pandemic rent assistance plan, typically for 1 year. This will give them a combination rent abatement and a combination interest-free deferral. The key is to any rent you're deferring, defer it out 2 or 3 years. But if you get the landlord to take $75,000 less in rent and defer $75,000 to a future date a couple of years down the road, you're positioning yourself better for the recovery program that's coming up. And then when we negotiate the lease renewal, of course, it's a whole different ballgame, because if they gave us a big enough abatement, we might agree to a modest rent increase. The landlord needs to survive too. But we specialize in negotiating lease renewal rent reductions. And we do about 80% of the restaurant tenants that use the Lease Coach do get a rent reduction on their lease renewal. And because, Larry, you compound that over a 5 or 7 or 10-year term, often it's $100,000 or more. So, but this doesn't happen overnight. This sounds kind of idealistic. This can be 3 to 4 months of negotiation. And that's why restaurant tenants need to be approaching their landlord a year in advance before their lease expires, and really start getting into the landlord's head and finding out what the landlord is thinking. If you find out that the landlord's thinking of selling the property and your lease is coming up for renewal, you're far better off negotiating with your existing landlord versus the brand new landlord who buys the property. Because any landlord, any developer, any investor buying a property right now isn't thinking of giving rent reduction handouts. They're thinking of ka-ching, ka-ching, how can I raise the rent? All right, so timing really factors into this. And if you're a sushi restaurant, it's different than if you're a pizza restaurant. Some of our pizza restaurant clients are seeing increased sales because they figured out delivery, right?
Yeah, what about this idea of a conversion of the lease to a percent of revenue with the landlord? What are you saying with that?
That's a bit idealistic. Most landlords won't agree to a percentage rent because I used to be a shopping center manager. Okay, I was the one responsible for collecting the rent and for determining who we were going to audit, because we didn't think many of the tenants were honestly reporting their sales. Okay, I'm doing a deal right now in Florida for a restaurant where we've negotiated for the percentage rent not to be calculated on delivery or takeout, only on meals that were consumed on the property. But what you're referring to is, instead of paying $32 per square foot, can I pay 10% of my gross sales? Landlords don't like that. The most immediate thing that happens is, if a tenant, most rents are due in advance. Right? June's rent is due on June 1st. But if a tenant is paying percentage rent, June's rent is due on July the 10th. The landlord doesn't want to wait a month and then hope you report your sales properly. And then if they don't believe it, they have to audit you. The more a business is a cash business, the less they trust you. The more electronic transactions you're showing, the more they like it, because they can track it.
All right, I'm going to switch going to Diane right now, and I have a question. I understand there's another round of SBA loans coming out also now for those people who may not qualify for this. Zach or Diane or Lou, what are you hearing about this new round of SBA loans coming out? Anybody?
Yeah, I'm not familiar with that, Larry. I haven't heard it.
I haven't heard anything about a new round as well. And Diane, can address.
You mean for non-restaurants? Because this grant program is very narrow. It's really only
Right.
for restaurants that provide food and beverage to the public. Like Lou and I have a client that supplies seafood to restaurants. And they
Okay.
were really looking forward to this program. And then when the program came out, it doesn't cover them because they are just simply a supplier. So I would think that would be the next step is for suppliers. But honestly, I'm sorry, I'm not familiar with what you're referring to.
Okay, I read it someplace about SBA loans. I read it someplace, but maybe I was incorrect with that. Let's talk about that because we do deal. This is about the restaurateurs and the chain of people that supply them. Where does this law leave them, and where do they go now for help? Because if the restaurant's hurting, so are the suppliers.
Well, if the restaurant receives a grant, the restaurant can use the grant to pay the old bills. So if they owe, like in my situation, the seafood supplier, they owe them $100,000, they get this grant, they could pay the seafood supplier for past product plus order a new product. So in a way, it does help a supplier because the supplier could be paid old bills that are aging, plus new orders can be taken. So while the supplier is not getting a direct cash infusion, there is an opportunity to pay the old bills and get in good standing again.
Okay. Well,
and to Peter's point, the technology that's available today to restaurateurs is enormous. Between point of sale systems, ordering systems, menu, driven systems, cost of goods sold. It's just a phenomenal time. And I think investment in technology today is critical.
Okay.
If I may, Lou, sorry, Larry, 1 second.
Go ahead.
If I may, Lou, I hate to say it, I'm turning into an accountant. Every menu item now has to be used 2 to 3 to 4 times on the menu or catering, and every single item coming across has to have a food costing sheet that is tied into one of our distributors. So it's uploaded constantly. And the amazing part, you'll love to hear this, Lou and Diane, it's free. I don't want to say the name, but everybody has them. All the larger companies have them. We didn't have the time before. And we worked on food costs. We live and die by our food costs. We used to be slightly over 30. Now it has to be well under 30.
And, I wrote a recent article for Forbes talking about, how companies can utilize this technology, especially data analytics and looking at consumer behaviors. It's so important today to understand your customers and what's going on out there.
Okay, Zach, we're skirting around these grants, and what can the restaurateur use this money for? I just heard about someone who got a grant in one of the loans, not necessarily a restaurateur, was just arrested for buying a Ferrari and a Lamborghini with the money. And he thought somehow the government wouldn't notice. What can you use this money for?
Yeah, I think on this one, it's a little bit more broad. To Peter's point, it's payroll, mortgage, rents, debt service, utilities, maintenance, construction of, if you're going to put up an outdoor seating area, supplier costs, to come back into, to Diane's earlier point, paying off some of your old bills, to the suppliers, getting current there. So there's a broader spectrum of uses as it relates to, you know, what folks who receive this grant can do. And I think as it relates to, you know, the owner operators, I think it's giving them a lot of leeway around, you know, how best to use it. Whereas before, under some of the previous programs, it was very clear the vast majority of it needed to go to payroll. And for some folks, that didn't even make sense because the restaurants weren't open or they weren't fully staffed. And so now, under this program, it's providing a lot more flexibility, you know, across a variety of areas for the owner operators to figure out how best to use this money.
And Larry, if I could jump in, I'd like to ask Diane what we've seen, you know, a lot of it. Was it on ineligible and eligible costs? Was it on the calculation? You know, where were the people really struggling with this out there?
As it pertains to this program or previous programs?
This program in particular.
I think that the applicants that we helped during the beginning of the month, their issue was that their gross receipts dropped, or they had to close because of the local or the state laws. And they were just looking to basically reimburse themselves and to be able to hire and then service the public once again. It truly is an amazing program because there's very few limits on what the funds can be used for. You still can't get a Ferrari. That was when the PPP, you can't, you just can't.
Sorry.
That was when the PPP was first issued, and, you know, that made the news because the guy was, you know, caught right away. There was also
Doing 150 on a 30 in a 35, probably.
I think he had a sign on his windshield that says, "Look what I got from my PPP loan," but that's another story.
Right.
And then also, you know, there's probably, because it's so broad, there's probably less of an opportunity to do something that's not legal. Like, for example, we had in Long Island, there's a big scandal here about a company, manicure. They said that they had 70 employees, and, you know, PPP was based on head count pretty much. Have you ever gotten a manicure? When was the last time you walked into a nail salon with 70 employees? I mean, obviously it was.
Oh, at least 2 years ago.
Obviously it was wrong, but you could pay back your old suppliers, get everybody up to date. And that is really what I was seeing. And I think there was a little confusion in the beginning, but now that I think that the SBA did a great job on the website. I think the program description is not that bad. It's only like 22 pages, not bad. And it's in English, and they make the application very easy. You can go right through the SBA. You don't have to go through a bank. I'm not going to lie to you. There's a lot of stuff you have to upload, but I think that they finally caught on. You know, there was a problem with the shuttered venue program. It was the SBA was overloaded, and the program crashed for 10 days. And I think a lot of people were very concerned it was going to happen with this program, but I think a lot of the kinks were worked out. And there's a telephone line that's very accessible with people who are knowledgeable. They may not know all the answers because, you know, I've called a few times, but there's a clear frequently asked question section that is very helpful.
Hey, Diane, one other point. What about these other tax credits that are out there, like the employee retention tax credit? Maybe you could just talk 2 seconds on that.
There are many other programs, federal and state programs. The employee retention credit was first introduced during the initial CARES Act when we first started getting COVID related type of funding opportunities, and it was limited. As of January, the employee retention tax credit had less limitations regarding who is eligible, and now businesses, the definition of what an eligible business is has expanded from 100 employees to 500 employees, and the per employee head count can be up to $28,000. So it's really quite generous, and it's available. And I think what else you're talking about, Lou, is in New York, California, and many other locations, there's other types of credit programs available to help the restaurants. They are Nassau County, Suffolk County, many of the counties in California have comparable or relatable restaurant recovery type of programs. Now that the city in particular is opening up to more restaurants.
Okay. Jackie, I know.
Yeah.
I know your family, or someone in your family, is involved with the brewery in Yonkers. How are they doing, and what are they doing to bring people into them right now, and how are they playing on this loan set of grants?
Yeah, so I can't speak directly to that just because I haven't necessarily been involved, and with everything going on, it's you guys know, right? It's execution rather than going out and chatting with your family about it.
Yeah.
But the one thing I will say that Peter and Lou had brought up before, the idea of data and outreach, right? So I think it's a very good time right now, and it's a free thing to do to kind of promote your business, right? I'm putting my marketing and sales hat on here. Ask if you have a POS, if you have a Facebook page, you can see who's visiting your pages, who's visiting your Instagram pages, who via the POS. A lot of times they do have demographic information, right? Knowing your customer, you can actually via Facebook, via Instagram, Google AdWords, you can target putting out ads to your specific demographic. And a lot of those are very inexpensive. One thing I saw executed so well a few weeks ago, my husband and I went to a restaurant, and they put a tag on the table with all of their social media information, encouraged us to post photos, but also gave a QR code to write a review about the business, right? So as you're sitting there, right off the bat, you can, whether it's Google or Yelp or whatever you want to do, or straight onto your website, you can rate the restaurant right off the bat, but also encourage people to share things. I know all the time I'm scrolling through Facebook, scrolling through Instagram, and I see somebody post, whether it's a burger or some great barbecue, and you're like, you know what? I know this person, they went there, let me try it, right? So not everything has to cost money, and encouraging the people who are, right? It's easier to sell to the people who are in front of you than it is to reach out to new ones. Use those people as spokesmen, spokeswomen for your business, because you always trust people that right? So everybody feels they know the people when they're connected on social media, whether they've met them or not. And it's a great way to really create some solid spokespeople for your business for either very low cost or for free. So
Thank
sorry,
you.
I couldn't answer your
No,
question.
that's not a problem. That's not a problem. By the way, we are going, the next one, which is in 2 weeks, we'll be covering things like the POS system and all the things that you can do with the money that the restaurants are going to be bringing in. And outreach is very, very important. And Peter, I'm going to jump to you on this one because you are the king of outreach. And you and your restaurant are the kings of outreach. We hear from you at least 3-4 times a week, and it's never oppressive. It's always to the point and interesting. What do you do?
We're involved in our community. I mean, let's be honest. What does restaurant mean? It's respite. Back to the basics. Respite. People come to us to forget their problems. They come to us for not just nutrition, but for a drink. So when it comes to outreach, we were fortunate years ago, and the rescue money can be used for marketing, but it's a long-term contract we have with the marketing company. But we serve our community, and what I mean by that is when it hit the fan, we reached out to News Channel 12. If there's anything we can do, let us know. We reached out to all the hospitals. We're constantly reaching out. How can we be of service? Yes, if you hire me, of course, it's going to pay the bills. But the first thing out of my mouth is, don't worry about the budget. Whatever you have, we'll wow you with it. That's what the client wants to hear. And we're fortunate that our restaurant has an outdoor patio, has a to-go area, has a bar, has a dining room, has a banquet facility from 50 to 100. And we invite News Channel 12. Did you need B-roll? And they're like, yeah, just come take a picture of the banquet hall of the restaurant. You don't need me. Don't worry about it. Do me a favor, just give me a heads up, just so you don't show up and everybody gets nervous. So for us, it's really about being part of the community. It's about, yes, we're hurting, but let's be honest, I don't care about you. Everybody, what's in it for me? So we just did a 2 days with a local high school that was having some challenges in their drama department, and we donated back 10% of to-go food. Well, ladies and gentlemen, let's be honest, 10% giving back to a local drama club is not a big deal. Yes, it was amazing. We had record sales on a Tuesday and Wednesday to go. We were prepped up for it. People actually came in. Thank you so much. We wanted to spend some money with you. The bar was busy. I'm sorry, I'm a restaurant with the bar. Our bar was busy. So we use our resources. If it's for our local hospital, for the schools, just to stay current and be a facilitator for what they need. How's that? Does that help?
Thank you very much. Listen, we're going to have to put a stop on this right now, but what I want to do before we go is I'm going to go around the room and I'd like you to give everybody to give their takeaway moment on this one. I'm going to start with Diane.
Thank you. So this program was open on the 3rd and started taking applications. The first 21 days are limited to a specific group. Is $28.6 billion available, and the SBA anticipates that the funds are going to be utilized quickly. The applications are going to be reviewed after the first 21 days on a first come, first served basis. If you think that you're eligible, or if you're planning on applying, I suggest you apply, get your application in there. The funds may be limited, and it's possible that they're not going to be increased. That is the takeaway that I'd like to leave everybody, is to apply and try to help yourself, pay off your bills, and expand your business. And I wish everybody the best of luck in doing so.
Thank you. Zach.
Yeah, I think Peter brought it up earlier, and it was a great point. We're all here to help in any way we can, from a banker, attorney, accountant, whatever it is, just reach out. Happy to help, happy to share perspectives on what we're seeing, and what others have done in your situation, and figure out ways that, to help navigate the current environment.
All right, thank you. Dale.
If you're communicating with your landlord, don't be surprised if the communication is difficult. Landlords have seen all of their tenants activated during the pandemic. They're talked out. So you may have to do a little bit of work to get your landlord on the phone or the property manager, but it's well worth it. You've got to invest in that relationship and start the lease renewal negotiations 12 months in advance if you can.
All right, Jackie.
Yeah, I think two main things. Number one, everybody on this panel is here to help you. Like, do not be embarrassed, ashamed, or anything to reach out, right? That's why every single one of them is here. There's any questions that you have, I'm sure everybody would be happy to field that. And then second, I would say you should be coming out of this a better entrepreneur, a better restaurant, right? Like Peter said, invest a little bit, look at how things could be done differently, how they could be done better, and try to implement that. So it's a time where unfortunately it's not as busy, but you can come out of this just, much stronger for the future.
All right, thank you. Lou.
Having this wonderful group of panelists talking about all the ways they can help is phenomenal. And I have to thank the government for these programs that they've put together, because without these programs, many, many, many more companies would not have survived. So I think it's a great thing that they've done this time through, even though we all hate taxes and all the rest of the stuff that goes on with it. But great panel today. Thank you.
Thank you. I know I haven't mentioned, we haven't talked to Fred or Peter yet. Did I catch everybody else? Because sometimes I skip. Okay, good. Peter, last parting words. Lift us up.
The American dream is to own your own home. Number one. Guess what the number two is? To own your own business. With that saying, own your own business. Yes, Diane. And everyone wants to have a restaurant or caterer. We are the American dream. People are looking to us to get them out of this. They're looking for, we had a customer yesterday. She came in crying hysterical. Her husband's not doing well and she couldn't have dinner with him. So we sent dinner home and we added a little something that he always has that of course is off the menu, but everyone's looking for us for answers. We are the economic engine. We can do this. There are so many types. This is a relaunch and a reset. There are so many ways to invest this money that will keep giving and giving and giving for many years. Change your windows so your restaurant turns to al fresco. Dale, if I'm your tenant and I say I'd like to upgrade your windows, I want to upgrade the HVAC so that I have less Con Ed bills, less utility. Can I paint the roof white so my roof doesn't heat up and I have to cool it down? The landlord would turn around and go, you want to invest into my building? Yes. This is, it's an exciting time. We've survived. We have a lot of talent in our industry. We have all you experts to help us out.
All right, Fred.
The moral of the story is just how lucky we are to have people like Peter Herraro. The passion and enthusiasm that they bring is what makes this business so incredibly exciting. But really, the two things that he talked about that I take away always are, one, get back to basics, which is every time somebody walks into your establishment, make sure you know what their name is before they leave. And yes, if you happen to be smart enough to capture their data as well and have an email address, that's great too, but at least know their name. And then the other lesson of all of this is people like Peter sell ideas consistently. That's what they do. They sell ideas. So for anybody who's in this, use these resources that you got today to create the new ideas that you don't have yet. And then just find the right one and make it work. Thank you to everybody. Amazing.
Thank you. Thank you. I feel after all of you speaking, I feel like the act that went on after the Beatles on Ed Sullivan. And it's not a pleasant place to be. But listen, I thank everybody for sharing their time, sharing their expertise, and anybody that came and listened. In 2 weeks, 2 weeks from today, we will be talking about, so now that the money is on its way and now you have an idea of what you're going to get, where will it best be spent? Everything is up there on Eventbrite. I'm sure Fred will be passing information out through the magazine, and we look forward to seeing you all. If anybody wants to get in touch with anybody on this panel, you all know where I live. Let me know and I'll put you in touch with them. And stop by Peter's place. It is I've been going there for years and years and years, and what you see here, you see in his restaurant, from Peter all the way down to the guy who picks up your plates and sweeps the floor. Everybody is a reflection of him, and it is a wonderful place. So in closing, I just want to say these two things. Everybody, stay positive and test negative. See you all soon.
Thank you all.
Thank you.
Have a great day. God
Thank you
bless.
for having us.
Thank you,
Bye now,
Larry.
folks.